Welcome back to Successful Living. The stock market. What a loaded question. Where's it going to go? Every time I sit down with a client, there's always a major concern. March was a tumultuous month, and we've made an incredible recovery to the point that we're at now. So regardless of where we are today, a lot of people think there's still a lot around the corner, and that's kind of the anxiety that kind of fills the room when we talk about investments. And so is there going to be a market correction because businesses are going to shut down again? The election is around the corner. Have the real numbers come out, and is it real of what the economy really is, or is it just a number in the bigger companies? So all that creates anxiety, and what we want to do is we don't want to act emotionally. We want to be able to act correctly in this. So let's take a look at investment mistakes that people make during volatility. First mistake that we see is people chase performance. So one day the market is high and everything is fine. Then the day market is low or starts trending lower and people are selling. You don't want to chase those returns. You want to have your portfolio correctly positioned, equities to bonds, and you want to, in a sense, be able to ride that out. Make sure that if you're in retirement, you do have the right allocation, that you have enough money there for 2 or 3 years in bonds that you could sustain a heavy correction in the market. Number two, short-term outlook. When we look at our short-term outlook, I wish I could get everyone to focus not 6 months, but focus 12 to 18 months from now. Because the odds are much higher that 18 months from now will be much higher than where we are now, or where we're going to be, say, 18 months removed from this fall. Number three, excessive cash. We don't want to hold a lot of cash on the sidelines. Make sure you have enough for an emergency fund. Make sure you have enough to actually take care of some expenses that you might have for 2 years, or if you have a large expense coming up. Number three, number four, market timing. So this is very difficult. When we do market timing, it is extremely tough to say, let's sell at our highest point. It's extremely difficult to sell at the lowest point, and it's near impossible to actually be able to do both of those simultaneously. So let's take a quick look. I brought this up a little bit, and this is really not, I don't want to say incredibly accurate. It's accurate, but we're looking at, if you looked at someone who was invested from 1996 to 2015, they put $100,000 away and never touched it. They'd have $478,000. If they missed the 5 highest days over 20 years, they would have only had $317,000. That's a $161,000 difference if they would have just been invested. If we go down there, we look at, if they missed 10 days, they'd be down almost half at 230. If they missed the highest 15 days, down 186, so on and so forth. My point here is, take the emotion out of your investing. Find the right asset allocation. The odds are in your favor that if you stick with it, you'll be better off than if you try to time your way in and time your way out. That is a recipe for disaster. So again, make sure you have enough money on your sideline, and also make sure that you are well allocated correctly right now. If you're thinking of making a move, don't think of going cold turkey, all cash. Think of making some sort of subtle adjustment. When we return, we'll have a question about Medicare and its premiums and how it's affected by income. Stay tuned. Welcome back to Successful Living. We have a viewer question. John from Narragansett asks, my wife and I are both collecting Social Security and have investment income. Will my income affect my Medicare premium? This is an excellent question. By the way, keep the questions coming on our Facebook page at Successful Living. Part B premium costs $144.60 a month for those people that pay for Medicare. It comes directly off of Social Security. What you want to make sure is that if your income goes too high, that premium automatically increases. So once an individual gets beyond $87,000, or a married couple filing jointly passes $187,000, that can double, triple, or even more. I've seen the premium go as high as $500 a month. And so someone would say, that's never going to happen to me. But where it happens to you is you retired, you want to pay off your mortgage, you want to buy a new car, you took out a withdrawal from your IRA, you're like, I didn't have extra income, but you did, and it got added. So be very careful, very aware, talk to your CPA about that. We want to thank you very much for sending in those questions. Continue to send them in. We enjoyed having you on the show today. Thanks for joining us, and we look forward to seeing you again next week on Successful Living. Thank you.